Last week, Nigeria emerged as a standout presence at the 2025 annual meetings of the International Monetary Fund and the World Bank, which held in Washington, D.C., where global economic challenges provided the backdrop for what turned out to be a week of recognition, renewed investors' confidence, and growing influence for Africa's most populous nation. Led by Mr. Olayemi Cardoso, the governor of the Central Bank of Nigeria, the delegation arrived with a strong message. The country's economic reforms are not only working, but are also beginning to yield measurable results. One of the most symbolic highlights of the meeting was Nigeria's election as the next chair of the intergovernmental group of 24 at G24, an influential bloc of developing nations from Africa, Asia, Latin America, and the Caribbean. This development not only elevated Nigeria's stature on the multilateral stage, but also confirmed the international community's growing confidence in the country's economic stewardship. Now, Nigeria will take over from Argentina on November 1st with the ambition of driving a forward-looking agenda centered on development, finance, debt sustainability, and inclusion. That's a big one for the IMF World Bank meeting. My guest is Prof. Uche Uwaleke. He is the director, Institute of Capital Market Studies, Nasarawa State University, KEFI. He's also the president of the Capital Market Academics of Nigeria. He joins me live from our Abuja studios for this conversation. Prof, good afternoon. It's good to have you on the show.
Thank you so much, Tolu. It's always my pleasure to be on your show.
Thank you so much, Prof. I think we should start from home and look at our last inflation figures and what we had before we go to the IMF and, of course, the positive comments that we've seen at that meeting. The last inflation figures in Nigeria, it's staying around 18.02%. Well, my question to you directly would be, do you see Nigeria ending the year in about 15%, which was projected by the federal government? And for you, what are those fundamentals still surrounding this decline?
Thank you so much, Tolu. Let me say that the concern around inflation is a very valid one, and that's because we need to really get a handle on rising inflation for many reasons. If you check all around us, in sub-Saharan Africa, for example, Nigeria's inflation rate appears to be one of the highest, even at 18.02%. If you take the case of Ghana, for example, Ghana is now experiencing single-digit inflation rate. South Africa's inflation is under 4%. Inflation rate is under 4%. If you look at, I was in Kigali two weeks ago, Rwanda. Rwanda's inflation rate is around 5%. So when you look at these countries with single-digit inflation rates, and then you compare that with that of Nigeria, of course, that puts us in a position that is not competitive. Okay, and of course, you also know that when you have very high inflation rates, the purchasing power of your domestic currency is lower, and because it's lower, people now tend to, find recourse, in other currencies, foreign currencies. So you see, it's something that encourages currency substitution. It also encourages, if you like, dollarization, because people lose faith in the domestic currency because of the purchasing power is low, and then they tend to demand the dollar. And that would, of course, increase exchange rates and impact negatively on your domestic currency, which is why I'm happy to note that we are beginning to see, a sustained disinflation, in the last 6 months consecutively. We've seen a deceleration in inflation rates, such that today we are talking about 18.02%. Now, as you rightly noted, the 2025 budget is based on 15%. The assumption that he made there, the target 15% inflation rate. And I think that at this rate, that we are likely to get December, is likely to inflation rate in December is likely to come in at a rate around what we projected in the 2025 budget. And again, that's optimism is on the back of the fact that yes, we are still going to see the impact of the harvest cycle is still going to linger. We are also still going to have the positive impact of the exchange rate stability we've witnessed now for some time, rubbing off positively on general price level. So if you notice, even in the month of September, Naira actually appreciated, and we have also seen the appreciation up to this moment. So Naira appreciation will have a positive pass-through effect on the general price level. So when you combine all this and the fact that, again, we've seen some moderation, stability, even in the petroleum, the pump price of fuel. So they have all contributed to bring about this moderation in inflation rate. And with the factors, being sustained, I see December inflation rates coming in around 15%, despite the fact that, yes, we know that December is usually associated with increased, demand. But as I said earlier on, the macroeconomic conditions that we have at the moment would enable, by that I mean the stability in exchange rates, the fact that we are beginning to see increasing crude oil production, pump price of fuel is, at least not rising periodically. So all of that will work to ensure that the year will close with an inflation rate that is very, very, very close to what we targeted from the outset.
But food prices still remains the front burner. Nigerians will still complain and tell you about price of food stuff and all of that when they go to the markets. Harvest season and efforts being made by government to address price of food. What are you learning, Professor Uwaleke? Are we getting there to the point that it becomes so significantly impactful?
Yes. I like the fact that you are focusing on food, because again, if you look at what happened in September, going by the National Bureau of Statistics data, it's the food components that actually brought down the inflation rate. The food components dropped by, or rather, of course, when we talk about inflation, it's not as if the prices, dropped, but it's that the rate of increase in the, price, dropped. So we saw a significant drop in the rate of increase in food inflation in the month of September, such that the MBS reported 16.87% inflation rate. That's the food. Remember, the headline inflation, the general one, is 18.02, but the food component dropped to as low as 16.87. And that's, again, is something that I think everybody can connect with, the common man can connect with. I go to the market myself from time to time, and I can say from what I can see, that food prices, generally have not been, in terms of the price rise now, you can't compare that with what we used to have, this time last year, because inflation rate is year on year, means compared to this time last year. So if you are talking about inflation rate for September, it is compared to what happened in September of 2024. Remember, there was a time, last year, yes, not far from, last year, you would walk into a shop to buy something, and the shop owner would tell you to wait for him to make a call to confirm what the price, would be. So it was that, yes, right. You recall that happened. So we no longer see such things now. And that tells you that we're beginning to see a lot of stability in the macroeconomy, in the price level in particular. So food is very important. Yeah, yes, you've made the point. We are beginning to see, as I said, the rate of increase in food prices and stuffs like beans, rice, curry, rice. We know what a bag of rice used to be last year and what it is today. Of course, it's much lower than what it was last year. The same thing applies to potatoes, fresh pepper, tomatoes, and the rest of them. So I think, generally speaking, these items, are coming down relative to, where they were last year. And for imported items, again, the fact that Naira is appreciating now, stability in the exchange rate, again, on account of the forex reforms, is also helping to moderate the prices of non-food items. And that's also why you saw the core inflation. The core inflation is the component that excludes volatile food, excludes energy. So that core inflation is also dropping. I think it came in at 19.6% in the month of September. So generally, I think we are moving in the right direction, but we also need to, sustain it. And whatever we are doing now to ensure that these things are in place, we need to scale them and scale them in such a way that the average Nigerian, will really begin to feel the impact. Of course, the average Nigerian will tell you that there's no doubt, which is true, cost of living is still high, and it is partly high because, as I said, number one, the rate of inflation is still elevated at 18%. It needs to really come down, significantly. And then number two, income levels are relatively low, particularly for those on fixed income. Fixed income compared to the cost of living, those people again will be feeling it. Of course, you also know that for a majority of Nigerians, the bulk of their income is spent on food. So that is the more reason I think the government, when I say the government, I mean both the federal governments, the state governments, and local governments should, focus on measures that will boost food output, boost food production, because that is one way we can be talking about ending hunger. That's also one way we can talk about ending poverty. It's also one way we can also be talking about reducing unemployment, because the agri sector that contributes 25% to GDP, we know employs the most in terms of employment. So we need to really pay serious attention to the agri sector, to be able to change the narratives, economic narrative, and also spur growth, inclusive growth for that matter.
Interesting stuff. Now let's take a step outside our shores and see what happened at the IMF World Bank meetings. We see a lot of commendations coming for Nigeria. Of course, still on the reforms. And the same IMF came up with a report, I think a week earlier, talking about those thrown under the poverty line, talking about the increase in those that have drifted into poverty. So some will tell you IMF is neither here nor there, but always some will say they are trying to protect their own interest. Well, I don't know. That's sentiment in one aspect. But what do you make of IMF's recommendations, concerns with regards to these reforms at the moment, considering the fallout of the reforms?
Yeah. Again, thank you very much for that question. I think IMF was only being objective. Objective in the sense that it was providing a balanced, balanced view. Balanced view in the sense that there's no doubt that the reforms, are beginning to yield results. There's no doubt that the macroeconomic environment is beginning to stabilize. Again, it's a no-brainer. Even critics would agree that as far as Nigeria's economy is concerned, the worst appears to be over. So we have relative stability now. Talking about, for example, moderation in inflation rate. As I said earlier on, We have seen that happen consistently for the past 6 months. So that's disinflation, as it were. And again, let me even mention this. If you check that MBS report, okay, for the very first time, we are beginning to see in the MBS report what we call deflation. Deflation is where you have negative inflation rates. So if you check the state profiles, okay, where you have a month-on-month basis, on month-on-month basis, the general inflation even fell, by minus 1.57%. So that's deflation, month-on-month. So between August and September, we actually saw, drop in prices. So in the area of inflation, as I say, we are seeing moderation. In the area of even GDP growth, the numbers, again, Q2 of 2025, GDP grew by 4.23%. So again, that's positive. If you're also looking at exchange rates is beginning to come down. In fact, stabilizing. The Naira, we've seen Naira appreciating. We've also seen the gap between the parallel and the official, market rates, virtually converging. So forex reforms, have brought about that. And of course, we've also seen what is happening in the area of our current accounts, our balance of payments. Again, on the back of increased investor confidence, capital inflows, into the country. So today we are now recording, current account surpluses. Again, that is also, something to cheer about. So that is positive. So amidst all these positive numbers, of course, not talk about what we're experiencing in the stock market. The stock market today, year-to-date return, over 40%. That's also another area to cheer about. And partly why that is so is also because of what the reforms central bank is also doing in the banking sector, the recapitalization exercise that's taking place there. So at the IMF meeting, they took note of all that. If you watched the, even the speech by the IMF managing director, from Christina Georgiana, okay, saying that Nigeria is one good example where reforms, have shown to work. The same sentiment was also echoed or expressed by the World Bank Director of Africa, I think one Dr. Abebe. So you find that, yes, it would appear that the international community is welcoming these reforms. The rating agencies, the investment banks, they're all lauding the reforms, which is also why the IMF, not too long ago, if you recall, revised the GDP growth rate for Nigeria for 2025, upwards to 3.9%, and for 2026 to 4.2%. Rating agencies, again, are also giving us, if you like, favorable ratings. So, but that is on the one side. And as I said, what the IMF, has brought out is balance. It's on the one side. On the other side, too, they have also said, because I also listened to that Dr. Bebe, he also talked about, ensuring that going forward, these macro gains, translates to, real gains for the common man, improved welfare conditions for the common man, okay, result in, reduced poverty. Now, it's also a fact that a lot more people are also, if you like, falling below the poverty level, which is why the World Bank talked about 139 million, persons, and that's also a product of the fact that you could have growth, but that growth is not inclusive, okay? And I tell you why it's important we focus, going forward, focus on the quality of the growth. So it's not enough to say your GDP is growing, but again, what are the, if you like, sectors that are driving that growth? The last GDP report by the National Bureau of Statistics, which talked about 4.23% GDP growth rate, they disaggregate it. If you disaggregate it, you will find that the agri sector, there, the growth by the agri sector, which contributes about, I told you, 25% to GDP, is weak. It's still weak at, I think it came in at 2.8%. Manufacturing sector, okay, which we also know is a critical productive sector of the economy, grew by less than 2%. So when you have the agri sector, which is the primary sector of any economy, you have the manufacturing sector, the secondary sector of an economy, not growing, strongly. Okay, even when the services sector is pulling that growth, the banking sector, the telecom sector, even when they're the ones pulling the growth, the common man will not feel it. Okay, because as I said, the primary sector, which is the agri sector, is lagging behind. So for us to have, inclusive growth going forward, for the common man to have a feel of the growth, something has to be done about the agri sector. But I want to also acknowledge that I think the government recognizes this. Yeah. That's also part of why you hear the government, for example, talking about mechanizing agriculture. Okay, a few months ago, the president launched 2,000, tractors that were, imported from Belarus, meant to be distributed to farmers. But unfortunately, as I talk to you now, I read in a report yesterday that the tractors, are lying fallow in the National Agricultural Seed, Council premises. They are yet to be distributed to farmers because according to that report, they're still waiting for directives on the modalities for, the distribution. So bureaucracy shouldn't be in the way, shouldn't come in the way, to executing government plans and policies, especially the ones that require speed. This is one thing that requires speed. Government, has provided the vehicles, the tractors. Okay, we expect that these tractors should go to the farms, to work and not just lie fallow in offices. So, as I said, I think that even the state governments too, the federal and state governments and local governments should pay more attention. That's the message I'm giving here, to agriculture. We should, be able to develop agri-value, corridors, if you like. Okay, agriculture today still remains largely an informal sector. According to the National Bureau of Statistics, 92% of the agriculture, that sector, is informal. So we should begin to think of how to, formalize that sector. We should begin to think of how to move away from isolated farms to agribusiness ecosystems, and that will require having intentionally, developing, encouraging aggregation centers close to production belts. Okay, intentionally, building clusters, agri-clusters, industrial agri-parks, if you like, across the regions in all the states. That is the way to go. Okay, and that's also the way to move away from subsistence and ensure that the agri sector, is formalized. By the time we're able to feed ourselves, produce enough food in this country, I can tell you poverty will reduce, unemployment will reduce. Of course. Okay, GDP will also, become inclusive.
Professor Uche Uwaleke, I must thank you so much, Director, Institute of Capital Market Studies, Nasarawa State University, KEFI, and also President, Capital Market Academics of Nigeria. Thanks for joining the program as always. It's always nice to have you.
Thank you so much, Sadu. Thank you.